Good morning. It's Market Day Report. Welcome to a Monday. We're ready to get things rolling. And we've got Brian Hoops waiting in the wings. Maybe we can talk export sales and a flash report in just a moment. First off, let's look at how markets have traded in the overnight session. Basically, lower trade across the board for everything. I think everything we'll tee up for you here to start the morning. December corn down 2 pennies, 4.13 1/4. Deferreds all in the red. For soybeans, same story, but a 7 1/4 cent loss on the November at 9.80 1/2. In January, a dime off of the $10 mark. It lost 7 1/2 in the overnight session. What about wheat? Same story there, half penny lower on the December at 5.68 1/2, with the March lower. Hard red or Kansas City down 1/4 cent. December 5.71 3/4. In Minneapolis, we trade spring wheat down 2 overnight, 6.03 1/4. And in the overnight session, cotton in New York down 41 at 70.25. All right, Brian Hoops, President, Midwest Market Solutions. Brian, we'll start with, let's see, a flash sale overnight?
Good morning, Tony. Hope you had a good weekend. Yeah, there was a couple small routine corn sales overnight, but at least we saw something. 124,000 corn to Japan, 120,000 corn to an unknown destination. So you get a little bit of help out of that. We saw a gap lower overnight in corn and in wheat. We came back and filled those gaps by the morning hours, turned back lower. But a big part of what's driving these markets lower, technical selling as a trend is, I think, turned in corn, soybeans, and wheat, all to the negative side in here. So we've got technical selling pressuring these markets, plus crude oil is just getting hammered this morning. It's down 6.5%, big gap lower. It's kind of spilling over into the traders or the fund managers' mindset that crude oil down as much as it is, we're going to see some weakness, spillover type selling. And then weather in South America looks really good. They've had quite a bit of rain, restore, there's subsoil moisture. Now they're caught up on some seedings. The crop progress numbers we saw on Friday out of Brazil and Argentina shows at least being seeded at an average pace, maybe behind last year in some cases, but at least average. And then we're going to get more rain in the forecast for the next several days. So it's a really good looking forecast for South America for crop development. Even our hard red, dry areas of hard red winter wheat are going to get some rain this week. It looks like a couple rain chances, probably the best chances since last spring. So weather is starting to improve. We're taking a lot of that drought talk away out of South America and even in the dry areas of the Midwest. We're getting some rain in that dry, hard red wheat belt, and we'll have the first crop ratings of the year for the winter wheat crop this afternoon.
You mentioned crop ratings coming. It's kind of a rating, if you will, on cattle, something known as the Cattle on Feed report that came out on Friday. So hang around. We'll come back and talk about that Cattle on Feed report as Market Day Report continues in a moment. So in our previous segment, Brian Hoops telling us about the sell-off in crude oil. Look at this. That contract, that front month contract, December down $4.50, 67.33. But you can tell we've been below $67 already. So off of the morning lows, but a lot of pressure right now in that crude oil market. One market that's really been overperforming here over the last year, up 17% year over year, the hog trade. December on Friday, 79.67, up $1.02. Now let's roll over to the cattle market, and we'll tie this back into a report that came out after the close on Friday. But October live cattle up 40 at 189.70, dime lower on the D's at 189.15, and then for feeders, front month up 22 at 249.62. November settled a nickel higher on Friday, 248.57. Cattle on feed report for October came out after the close. Brian Hoops, President, Midwest Market Solutions. Okay, Brian, I didn't see a surprise, did you?
No, if there was a surprise, it was maybe in the placement numbers, just a little bit negative there compared to the trade estimates. But overall, it's a really friendly report. On feed supplies at 100%, just a couple ticks more than what the trade was expecting. Not much, if any, changes expected to happen to the December contract this morning off of that news. The placements did come in at 98.1%. Trade was looking for around 96, so a little bit more than what the trade had expected, down from last year. Marketing's right in line with expectations at 102. So there's some friendly numbers here in this report. I think overall, if we get any selling, it's probably going to be in that February, April contract initially anyway. But then I think we find more buying interest to come in. The calls for cash trade again steady to higher this week. So I think we're going to see any weakness be very short lived and probably try and rally higher after this. In fact, there's not much selling showing up in the December contract. I stole a peek there at commercials, and the bid ask suggests just kind of a steady type opening with a little bit of selling in February. We also had a cold storage report out Friday afternoon, and that doesn't get talked a lot about, but beef and freezers were up from last month by about 6%. The year-over-year numbers are still down a couple percent. Pork numbers here, I'm trying to find it. They're up 1% from last month, down just slightly from a year ago levels. So not much change there for that market either. The hog market's had a pretty good run here recently. We're starting to get into some weekly overhead resistance. We're starting to line up with that lean hog index. So our big runs may be starting to slow down here in this hog market, starting to maybe get more of a choppy type trading affair.
And the other thing we're dealing with, we'll have some holiday shortened weeks coming not too far from now. And especially when you start dropping in, I know we're a ways away from Christmas, but you drop in a Christmas in the middle of the week and a New Year's Day in the middle of the week, and we're going to have some short weeks coming.
You bet. We certainly are. So that it's a few weeks in the future here, but yeah, it's something that Packers no doubt will use, trying to prop up some of their box beef margins. They're still very, very profitable after paying higher cash trade last week, still over $50 a head profitable. So we're looking for more strength again this week.
All right, Brian, great to see you. We'll see you back here tomorrow. Brian Hoops with Midwest Market Solutions. Okay, want to bring up the cocoa market this morning. Good way to start your Monday morning. Cocoa market is higher. And I mention this because it's actually been lower week over week, down 7%, month over month down 17%, but still one of the top performers year to date in our ag commodities, up 63%. Now, what's the number two? It's actually orange juice. As orange juice has performed, it's down nearly 3% week over week, but is trading 3.4% higher month over month, up nearly 52% year to date. And the final one, I'm trying to run this one up by myself this morning on the second pot of coffee already, up 1% week over week, down nearly 6% month over month, but coffee continues to rally. 35% gain year to date for coffee in the December contract. You can see ticking up now at 253.65.
In fact, I'm trying to figure out what I can cut out to adjust for the rise in the coffee, the cocoa, and the orange juice, because those are three things I'm not going to give up.
Absolutely. And so between the two of us, we may be driving the demand for that.
We may be impacting the market.
I'll go start another pot.
Thank you.
Okay.
Thanks, Tony.